Hello, welcome to Koyos Collective, where we provide actionable insights to both current and aspiring entrepreneurs. I'm co-founder Antonio DeMeglio. Today we're here for a very special episode where we are actually speaking to a venture capitalist. We're here today with
Sid Bose.
Sid, it's a pleasure to have you here.
Thank you for having me.
So, could you start by telling us about your journey into why you have chosen to start a venture capital fund while being an MBA student? Seems like there's a lot going on when you're an MBA student. I know there's a lot of travel, a lot of networking. Starting a VC fund is not something that's usually on the bingo card. So would love to learn about your initial motivations and why you chose to start a fund.
Absolutely. Starting a fund, honestly, was not on the cards, not anytime soon at least. But let's just work backwards from where it kind of started. So I've been working with a climate tech fund called Evergreen Climate since earlier this year, February, March. And I've really been learning the ins and outs of running diligence, sourcing, et cetera. In May, I actually met my to-be co-founder, Patricia Tang, who is also working in climate tech VC. And we started talking about potential businesses that we'd want to start. You know how business school people are looking to start the next new thing. But what we realized really quickly was that funding at Penn, for example, is disparate, right? There's non-dilutive grants that exist, there's VCs that exist, but they're not all on campus. There's not a ton of funding to go around. And we realized that that could be a reason why Penn doesn't have as many founders as other schools potentially. And so we thought about why not starting our own fund here, right? We've seen successful models at Stanford, at Berkeley, et cetera, where students have come together, put together their own funds, and run a fund that supports their classmates as well. And so the hope was to start Center City Ventures to do the same.
So Center City Ventures focuses not only on having the MBA students like yourself participate in the fund and understand both about raising the fund in addition to doing diligence, but also supports current entrepreneurs within your MBA class. So I'd love to hear how you got to the decision to kind of make that choice, because it's hard enough for venture funds that are looking throughout the global scale to be able to be successful, but focusing in on your class is a really interesting choice. So we'd love to learn more about that.
Absolutely. Actually, specifically, we took a decision, given that this is the first fund, to not only look at our class, but to look at Penn students in general and alumni as well. So looking at the whole Penn ecosystem as a whole. And the reason we did this, compared to, for example, the Stanford model, where they're funding their classmates specifically, was that we wanted to ensure we had the correct aperture out the gate. I think it was most important to have a success story coming out the gate as opposed to narrowing down too much and then realizing that we didn't have the successes out the gate as well. So specifically, we looked at the stats, looking at Penn founders at the undergraduate level and the graduate level, for example. I think we've raised about $70 billion across founders in the ecosystem compared to Stanford and Harvard. That's about 2/3 to a half of what they have, which that still comes out to third in the country. And so we know there's a ton of really talented founders within our ecosystem, and that's why we chose to really focus there.
So where did you find those statistics?
All on PitchBook, honestly.
All on PitchBook. Okay, yeah. That's really insightful, because I think that there are some people listening to this that may want to start a fund at their own school. Absolutely. Or just even if they're not an MBA student or an undergrad student themselves, maybe wanting to support people from certain schools.
Absolutely.
Do you have any, opinions about the current college entrepreneurial ecosystem? Because you've had to engage with it a lot, I'm sure, in terms of starting this fund at Penn.
Absolutely. And I can speak more about the experiences I've had at Penn and at Wharton specifically. I think a difficult thing and maybe a misconception about entrepreneurship, for example, is that it's an all-in mentality, right? You have to take massive risk in order to actually succeed as an entrepreneur. And honestly, that's what I used to think back in the day as well. I think Neil Blumenthal said this really well, one of the founders of Warby Parker. He said that entrepreneurship is specifically about de-risking the experience as opposed to just going all in. And I think that that's one of the biggest things, right? Especially at the Wharton MBA, for example, we have several folks who are specifically focused on consulting or going into finance, going into the structured recruiting route, primarily due to security, as opposed to an entrepreneurial route, which seems very unsafe and very risky. So I think a goal, honestly, with Center City Ventures specifically is to offer that kind of support, right? Having the ability to raise a productive pre-seed or seed round can give founders the ability to feel more conviction behind their actual company, as opposed to feeling like they're going in blind, right? Being able to actually get into a situation where you can choose entrepreneurship instead of the contract from McKinsey, for example, needs to be an easier choice. And I think that that's really something about the entrepreneurship ecosystem that we're looking at the moment.
So is there an education gap, you think, like for students, right, where it says like, okay, you think you're taking a safer route, perhaps,
right,
but instead, there could be maybe a higher chance of success. And if you're an MBA student, you know something about statistics, right? You know something about odds and probabilities.
Right.
Maybe there is a strong set of odds that you are able to actually do something successful, rather than just, getting into the normal game. So how do you grapple with like educating people that like there is a possibility of success for a risk-averse audience?
I actually think it's not so much about telling someone that it is they're like the expected value is high, right? I think that that's just not the sales pitch that people want to hear if they are risk averse, right? Not everyone's going to be Mark Zuckerberg necessarily. But I think on the other hand, what it's about is people say you can't teach entrepreneurship, and I agree with that. But at the same time, you can teach ways to de-risk the experience, right? Like, for example, for entrepreneurs looking for funding, often they'll come to a VC and say, I need X amount of money for this valuation, and they'll get turned away because they don't have any traction, right? Their product market fit is fickle or non-existent. So it's more about how can you get to those little stepping stones, right? How can you get to stepping stones towards success, getting some traction, getting some letters of intent, for example, having actual interest in the product that can allow you to de-risk that process, right? And you can do that while you're in school. You don't have to drop out. This can be a project until it becomes a company, right? Mark Zuckerberg even said for Facebook, they never intended for it to be a company. It just happened to be a cool thing that they were building at the time.
So I guess like there must also be some, communal benefits to starting, something like this out of college, right? Because there's people that are inevitably going to get into VC and also going to be able to, you would potentially, if you make those connections, be able to be a follow-on option for some of the largest funds, especially at a school like yours. Is that something that's also relevant here?
Absolutely. I mean, like building the network of founders and funders is massively synergistic, right? Even within our class, for example, we have a couple of founders who are really, really productive, and there's several people on the VC and private equity side who could be potential funders for them down the line as well. I think in addition to that, having the cross-pollination between founders and funders just allows founders to be more savvy about the funding process so they can come up with a more robust and resilient pitch for when they do make the pitch finally. On the other hand, it makes VCs and private equity people more educated about the tech landscape and the needs of the founders as well.
It must be interesting to take some classes with people that are your funders, for the founders in your class, but it also must be interesting for you to take classes with LPs of your own fund. So there's definitely synergistic elements, and perhaps that pressure actually is a good thing,
I think so. I think that this is an ecosystem that really fuels itself, right? I think it needs some kind of a stimulus from the outset, which is really why we're trying to come in here, right? Offering an option to learn, to fund, to support. But at the same time, it just comes down to the more impetus, the more energy, the more momentum, and it just keeps rolling.
And there's surely a transparency element that I think is cool there too, because I know from starting a company at NYU when I was there that when there's a company that's doing something on campus, especially if you're being told to go to entrepreneurship classes, you're showing up at clubs, there is like a natural element there. And I guess like your investors that are part of the fund could say, hey, wait, I've seen them, they're getting some traction. Because I'll always be one to say that a little bit of traction, just from even putting the word out a little bit. That's what we're doing here. We're at the NGEN Conference in New York City, by the way, today at the Lowenstein Sandler office in Manhattan. NGEN is Next Generation Entrepreneurship Network, and that's how we got introduced to Sid here. And, there's that incredible element, I would say, of even 1 to 10 people can turn into your advocate. And I know it from firsthand experience. When one person becomes a major advocate, that can lead to exponential growth. And MBAs are incredible people that are prepared to be the next generation of business leaders. So I think it makes a ton of sense. What are the next steps, and what are some trends that you're looking out for in your future investments for the firm?
It's a great question. I mean, at the moment, we're looking to close out the fund. We're currently at just over $150,000 raised from the class of 2026 itself. We're looking to gain investors from the alumni base, from the executive MBA, et cetera. So that's step one. In parallel, we're also investing, or at least diligencing, several companies in our pipeline at the moment, several who are on campus, several who are alum as well. And honestly, trends-wise, I think UPenn has a very interesting inflection point at the moment. We've put a ton of investment into the generative AI movement. We all have enterprise licenses with ChatGPT, for example, and we're looking at several companies that are riding that wave of generative AI. I think that there's a part of it where people think that's a fad, but at the end of the day, this is the wedge to getting AI into the hands of really the masses. And so looking at trends really on that front, we've looked at some hard tech and hardware products as well, but primarily looking at companies that are spanning from AI to health tech and fintech, et cetera.
What is the number one question you typically get from prospective LPs?
I guess it depends. If they're students, the question is primarily around what is the experience and educational program you're going to provide for us. I think if it's alum, it's more about what traction do you have thus far. And I think, honestly, running our pipeline as robustly as we have for the last couple of months has provided a lot of that. Even our fundraising started off with, we raised about $50K in a month and a half. In the last 3 weeks, we've raised another $100K, which, to your point, really speaks to the value of traction as well.
And how do you show traction as an early stage fund?
I mean, raising the fund itself is part of it, but I think in addition, talking through what your pipeline process is itself and talking about how many companies are making it through that pipeline, right? For example, we have a 2 to 3 stage process where we do a basic sourcing call, an evaluation, and more of a deep dive. We've actually passed through 3 companies through to that deep dive stage, starting with 10 to 15. Just seeing that progress itself is a real form of traction at the moment.
I think people look for organization.
Absolutely.
Whether it's for an investor that's seeking to invest in a company or an LP that's seeking to invest in a fund, I think there's a lot of organization at play. Because this is at the NGEN conference, I think that's a good lesson for some of us scatterbrained young people, is to be able to think that, hey, you can have an incredible, long-winded, exponential growth roadmap in your head, but if you are not organized in your approach, you're unfortunately probably not going to be able to get the tools that you need to get there. Well, thank you so much for your time today, Sid. Where can people find you and learn more about Center City Ventures?
Absolutely. Our website is centercityventures.com, and we're on LinkedIn as well. So please do reach out. Always happy to talk to founders or prospective funders as well.
Awesome. Thank you so much for your time today.
Absolutely. Thank you.